Good morning, everyone. Hey, Johnny, how you doing? How's Port Jeff? Did you guys have a good Labor Day? Hey, Juan. Good morning, good morning. Welcome, everybody. Hopefully everyone had a good long weekend. Took in all the sun in the last weekend of summer. Hey, Jerry Lonigan, how you doing? That is one thing I do not enjoy saying the last weekend of summer. Oh, happy birthday, Dan. Good stuff. Hope you had a good one. Well, folks, here we are, September. September. We have September, and then we go into October, November, December, last quarter. We're going to be rolling our contract in a couple of weeks. Hey, Raj, how are you? And we're going to roll into the last quarter of the year. Hey, Travis, how you doing? Hope you guys had good weather in BC for the last long weekend. Gosh. Well, not much to report this morning. Um, we've got two B-shaped profiles in a row. I'm kind of ignoring yesterday's this little. I don't really put much faith into that. So I'm looking. What we've been trained to do from the market profile guys is to look at the last full day of trading, which was Friday. Okay? So basically, we've been inside Friday, right? We had a B profile on Friday. Now, what does that mean, a B profile? It just means they're fat at the bottom like this, like a lowercase letter B. And what that is when we had the break above 6507 and then liquidation on Friday. We had markup in month end, which was Thursday. Friday we have liquidation. It got caught. Spent most of the time between 64.58 and 64.75. Now tonight we've got the same kind of shape profile, except it doesn't have any excess on it. It's got a poor low, which means there's some competitive buying down here at our 63 low. Interesting. Now, because it's a new month, I am very, very cautious on making predictions, right? So I'll let the chart kind of tell me what's going on. Right now, the chart is telling me just not much going on yet, right? We have people will be coming back into work now this week. Now, I don't expect today to go like gangbusters, right? Traders, they'll slowly start coming back into work. Investment committees will start meeting next week. So you'll see little blips of action here and there, but nothing full on yet. As we go into contract rollover, it should get a little busier. And then you'll notice that it'll get slow again as they split the volume between two contracts. Everything's going to gear up for the end of the year, right? Now, what you got to think about is year end. Always think about the agenda in a market, ladies and gentlemen. Okay? This is something that retail traders never do because they've never been taught about agenda, right? But order flow is created because of agenda, right? Nobody just puts in orders randomly, right? Order flow is put in to accomplish an agenda, whether it's distribution most of the time, but it's usually markup and distribution, right? Because that's what a market is. You mark stuff up and then you distribute it, right? You acquire cheap stuff, you mark it up, and then you distribute it. We are still in distribution in this market. If you look, ever since, right, our friend Jay Money did his Jackson Hole business, right, we've got from, I'd say, this level here, that's 64.44 area, right? We've had distribution above that level now for the end of August. Till we break 64.44, there's really no change. So your first major downside levels, right, today are Friday's low and then this low. I'll give you that exact number when we get there. We'll go to the next chart. Okay? So here are two scenarios. Right? Two scenarios. One is that we get some liquidation, right? And we break these two levels and this starts tumbling out and we start going sideways here. Okay? The other scenario, short term, is that if prices cannot break this level and you take price sideways long enough, it's going to attract buyers and you'll get a move upwards. Now, if we take out that 65.23 or whatever it is up here, there's nothing up here to sell into. So it's brand new. There's nothing up here. There's no cost basis. Nobody owns ES at 65.70, 60 that's going to sell. So it's all really dependent on the order flow that comes in. The inventory is here now. We're in distribution. We have multiple short positions underneath us which still have not gotten filled. Going way back, right? I did a weekend update video. It's posted on YouTube. It's also posted on X under vwaptrader1. Please check it out if you have not already. Let's go take a look. There's that poor low, right? That's a poor low, which one tick of excess. That means there's competitive buying right here. I'm sorry, I've got the wrong. You guys notice this M low here from Friday? Now I know Friday seems like a lifetime away, but the last half hour of trading on Friday, that's why there's buying here. Because the last half hour on Friday before the long weekend, people got short down here and got trapped as the market high closed, right? Or attempted to high close. So this is some short covering that's going on here tonight. And you can see evidence of it because we have a poor low. So now when London opens, our first thought is, when London opens in 20 minutes, can it take out that 63 low? And if it does, we'll be looking for 58, which will be the next lower stop underneath us. Okay? And then Friday's low is down here at 55.75. And the low that we're talking about is 64.44. That's where those single prints all the way down to 64.28 are. a big short position from when Powell came out and said his thing. There's that day. You can see it, right? You can see that is a lack of supply gap in the middle of the day. Overnight inventory is pretty short because all the trading is underneath it. That's why, if you wonder why there's a poor low and you wonder why the market's going higher, it's because overnight inventory is short. It's probably about 80-90% short, right? As most of the volume, at least 70, I'd say maybe 80% of the volume is underneath Friday's close. So that's what we're looking at tonight. My balance zones are 64.5 to 67.5. Double them for profit at 73.5. Double them for discount at 58.5. Right? And low volume. Right? Everyone's still on holiday, trade maker. Like we're the only ones back. Like honestly, if not for you guys, I'd probably come back to work maybe tomorrow or the next day. Right? In fact, I've got a bunch of doctor stuff scheduled, so I won't be around for the morning after this. All right, I gotta go. Now that I'm old, they're always poking and prodding, right? So it's not like I'll be actively trading. I'm just gonna sit back, watch, right? Do a little bit of scalping, right? We have that 15-minute chart. Ah, Johnny, what you can do if you don't have market profile is to use a half-hour candle chart. Mark the 5 p.m. close, the 5 p.m. New York close. And then look at the volume traded above it in the overnight versus below it. Now, I don't know how to set it up on a candle chart, but I'm sure there's a way that you could set up a candle chart with, like splitting the time, right? There's got to be a way of doing it. I haven't done it because I've always been a market profile guy, because market profile gives you very quickly where the inventory is, where the stops are, and where the signal prints are, and where the poor high, poor low kind of thing are. Those are the things that market profile gives you very quickly so you can reference quickly. But I'm sure there are ways of doing it on candle charts. You just got to be a little bit more detail oriented, right? Profile's a great thing, but you don't have to have it to trade. What we want to do is use what market profile teaches us, right? And you can put that on any kind of chart because really all charts are just a method of keeping track of inventory, right? Hey Alex, how you doing? Yeah, see what you come up with. So we've got upper stops here at 71.5, and that's at least an hour, another hour that we've had 1, 2, 3 hours underneath 71.5. So I think if we took out that 71.5, your target would be 74, which is the Friday close. Excuse me. And then up here at 76.5, which is basically when I put these stops in, folks, it's just a nice way of keeping track of where the selling could potentially be. Because if I was a large trader and I was long, say, maybe 300 contracts here, right? I'd sell into these stops because that's where the buying is. If they get cracked or they get executed, buy orders will pop in, right? Because if people are short, they'll have their buy order here. So if those buy orders get triggered, that's a place where you can dump inventory into those stops. That's why you guys get false breakouts, right? The reason, do you guys know why false breakouts occur? Right? A lot of people love to trade a breakout. I hate buying a breakout. right? Because I've been trained to dump a bunch of inventory into the breakout, right? The reason why false breakout occurs is because large traders with inventory, right, product at a lower price, are just sitting there waiting for you guys to break it out. And all the suckers come in, then you dump into them. Now, it'll only work if enough people come in and they can just lure and they can just raise the offer and keep getting you guys to chase price higher and higher and higher. And then hopefully it works and you buy the breakout and there's enough buying to sustain the breakout. Right? I hate buying a breakout because I've been taught to sell size into the breakout. The breakout creates buying. Right? That's why you guys talk what do you guys talk about? Something with a broom sweeping. You guys have all these terms like, right? A liquidity sweep, right? So when you break a market out from a prior high, it creates buying, which is the perfect opportunity for a size seller to distribute or dump their inventory. It's like that story about Jesse Livermore. He was long something, I don't know what it was, cotton or one of those crazy things. And everybody there was this rumor that he was short. So the next day everybody thought they would corner him and they came just rushing in to buy. And when they came in and bought, he nailed out every single piece of inventory he had and he just dumped it, walked away. Thank you. Right? And they all got left holding the bag. So breakouts are something, I don't know, trading breakouts for me is kind of like a fool's errand. Right? People do it successfully, but boy, I would definitely want to buy it on a retest. How to find those pinata lows? Well, it's generally, Mohammed, it's usually like a weekly low, right? That kind of thing, right? What you do is you just look and you go, okay, well, there's a pinata low there, and then there's one right there, right? So you look at those lows. If those lows get taken out, anyone who's long above them is going to crack and start selling. Oh, no problem. And what I'm talking about when I talk about these lows and things like that, it just comes from watching. Just comes from watching. Hey, AZS, what's going on? You think we got high volume? 39,000 contracts? Okay. What's up, John? How you doing? Yeah, I'm just kind of sitting and hanging out. Did the Trumps they launched another meme coin, didn't they, on Monday? 24 cents. You got 157,000 volume. Oh, I think you got. I think you've got all the volume combined, AZS. I got 39,000 contracts. What do I think about 6428? I don't know. Is it a lucky number? I actually haven't thought about it. Pull back the curtain there, AO. Tell us, what do you think about it? I have no thoughts about it. Yeah, I'm just looking at the volume from 6 p.m. Eastern time, guys. So I've got 39,000, and then yesterday's little session did 33. So Sierra breaks them up. Oh yeah, and there was Sunday night too. What's not on here as well. So I don't know. What do I think about 6428? Let me indulge you, you crazy guy. Well, I've got 6428 as the bottom of one of my zones. 6428 to 6507, right? It's the bottom of those single prints. We'll see. We'll be looking for bids there if we get down there. I'm a fairly simple guy, AO. I like to keep things simple. It's the bottom of those single prints. There might be some bids down there, but I don't know what's going to happen until we get down there and tickle it with some order flow. You know what I mean? I know a lot of people really love being like the fortune teller, putting on the big hat and lighting candles and doing the whole Whoopi Goldberg and ghost thing, but I don't know. I don't get off on it, you know. Most people I know just want to trade, make some money, and chill out. I don't know, I've been doing this 33 years, so maybe I'm not as caffeinated as I should be. What's going on in the room over there? You guys still awake? I'd love to see some liquidation, right? For more than a day, it would be nice to liquidate for more than a day. That would be nice. Reset the cost basis a bit going into the last quarter. I could get on board with that. Not much to do here. Jeez. Can you show your strategy? Hi, Orca. Is it your first time with us? So my strategy are based on two trades. One's called the look below and fail. The other is the look above and fail. The look below and fail is a trade where the market goes, sells off into one zone, comes back, I buy it, I put my stop here, and I sell at the top of the zone. Pretty simple. Well, welcome. Thank you for joining us. So right here, for example, this area is a no trade area, right? When it's doing this, I don't touch it. I only trade from the edges. So when the market looks below and fails, I go long, I put my stop here, and then I sell into strength. Long, looks below and fails, long, stop, sell into strength. Very simple strategy. And if you join us, if you keep joining us, you'll see it happen over and over and over again. Right? So if we can creep up over, let's see if we can take out these 71.5 stops here. Oh, we're tickling them. Let's see. Now, do the large traders who are long 70 to 66, do they dump into it? Or is there enough buying that we can take this thing up to the 73s? So my strategy, Orca, is very simple, right? When I see there's a lack of supply, I'll buy a little supply. When I see that there's too much supply, I'll go short. The only time I'll go short is once I identify a seller, right? So if I was shorting and the market did this, looked above and failed, right? I know that the sellers are here underneath 73 and competing. I'll short, put my stop here, and then target the next lower level. Very simple. So we're taking that stop. Let's see if we can creep up to 74. If you're long, that's my target, is 73.5 to 74. Yeah, I'm seeing that poor low. It's keeping me from being short biased, right? Inventory is short. We got a poor low, right? Unless something really weird is going on out there, we're going to go up, right? The structure is telling us higher. Okay, we got a seller at 72. And then I'll just go and mark 71 and 3/4. The levels work, Johnny, because it's just inventory, right? Markets are just about gathering, marking up, and distributing inventory. Right? So, no, John, no, I don't take trades in the middle of a zone, especially in Globex when it's kind of slow. And we've spoken about that, right? One color to another, just keep it simple until you get consistent. Also, I haven't traded since Friday, so I haven't traded for 3 days. So I'll sit and watch, look for where the bids are. Right? Think sniper instead of heavy artillery, John. Right? Because we don't have a lot of money to blow, right? Knocking on that 75 seller, right? 71, 75. There's a seller there. Others may. But I mean, John, you've been with us for how long now, right? I pretty much do the same thing every day, don't I? I pretty much say the same thing every day, right? Yeah. I like the edge. Why do I like the edge? Because there's more action at the edge, right? When you go deep into the discount zone, generally you'll have a better move from 58 up to 64. Okay, we got a seller at 71 as London opens. It's a bit slow. When you're trying to get consistently profitable, let's see if we could take out the 72s. Here we go. Now, if you are scalping and you're scalp long, say you bought 70 and a half, right? And you're using this candle as your out, right? Put some sell orders just under 74, maybe 73 and a quarter. Quite a few, eh, Travis? Well, I mean, those are who are around. I don't even know who'd be trading right now. Here's that 15-minute chart. Hopefully, maybe that'll help you guys. Once we get above, sellers don't defend positions. It's not like hockey, okay? Sellers reduce price when they have to. So if you've got 1,000 contracts for sale, Orca, and I've got 1,000 contracts, and so does Johnny, and so does Dan, if we're all selling at the same price and we see the flow of customers dwindling, we will lower our prices to capture the buying. Does that make sense? Buyers and sellers don't defend price. That's the best way to go bankrupt. Okay? Right? So support is created when a market comes down to an area where it sees a bunch of buy orders. The sellers stop selling and raise price. Right? There's no buyers here defending price. That's the best way to lose all your money, is to try and hold a market up to support it. I saw a man lose about $150 million with that once. Yeah. He had a stock, he took it up to 17 bucks a share on Nasdaq, made about 130 million bucks. He was rolling. He made so much money that he had two Range Rovers, one that he could drive while the other one was in the shop. And then they started shorting his stock. Instead of just dumping it down to like a nickel, he stood in there and tried to buy it all back, and there went the 130 million bucks. Brutal. You never ever defend price because you have the lowest cost basis, and you could always, if you run out of stock, you could just print more. Right? That's what he didn't understand. I always still remember that. Two Range Rovers, because one was always in the shop. Let's see if we can stay above VWAP. We might just go sideways here in a tight range as we take the cheap crap we bought here and distribute it. But if there's not enough buyers to get over 73, we'll sell it for as much as we can here, and then we'll have to put it on sale. Let's see what happens. Yeah, I never saw. I like he and that 130 million went quick. Whoo! It went quick. Well, John, the good thing is nobody gives a crap about opinions. And John, trust me, you've never been in a room with 10 guys who are selling 180 million shares each. We're kind of solitary individuals. We don't do that in rooms. No. Where I come from is a different world from your buddy who works on a desk there on Wall Street. Okay? It's a very different thing. There is unlimited supply regarding stocks, Dan. Depends on what kind of stock. I come from a very different world. We are the distributors. And we work in the shadows. We don't work in the light of day, that's for sure. Yeah, sure, I sat on a trade desk where I learned how to trade, but that's not where I made the big money. Let's see if we can get down to 69. A bit of a choppy mess. Oh yeah, stock is 15 cents. Stock's just paper. In the old days, we used to call it paper because you get paper certificates, right? You could always issue more, right? And you look at stocks. A lot of these companies where they have what they call stock-based compensation (SBC), where a lot of the people who work and the consultants who work for companies get stock that they don't pay for. One thing I'll tell you guys, right? One thing you should know, and one thing the general public has no frickin' clue about, is that is the lesson of cost basis. You might not think it's a big deal. I talk about cost basis all the time. He who has the lowest cost basis has already won. So if you're buying stock, exactly, Johnny, if you're buying stock at $5 a share, and I'm selling stock at $5 a share, well, I sure as hell didn't pay $5 a share for it. I got it at 0.001 cent, right? I got it for a tenth of a penny or a hundredth of a penny, right? Usually it's, 5 grand for 5 million shares. Do the math. Do the math, folks. That's why I like trading futures, because there's no zero cost stock, right? Sure, there's wholesalers with a lower cost basis, and there's the move right back down. I'll be doing more sessions this week, just kind of easing into the week here. What I'm curious about, folks, is as the Globex session wears on during the morning here in the UK, I am looking for that 64.63 to get taken out. I'm like short term, I'm kind of short biased, right? Just because there's no reason to mark up the market because we're into a new month, you know? So I am a little short biased. And we've seen that there's sellers here at 72. There's sellers under VWAP. We're going to come back into this ballot zone now, right? And I think that overnight low is going to get tested. If you were short here, let's watch the reaction. That was a pretty quick move, wasn't it? Got on sale very quick from 71 to 64. I haven't taken a trade yet because as soon as this session's over, I've got to run out the door to the doctor. Nice move, RC. Look at that. Let's see. Can we break that 63 low? I'm short biased. I'm saying it out loud. I'm JJ and I'm short biased. There's the break. Shorted 64, covered 62 and 3/4 on one micro. Just fooling around. See whether or not there was a break. Let's see what if we can hold 62 now. Right, that's a proper low. It's got 2 ticks of excess. Let's see if we can take out 62. And if we can, we'll come down to this 58 level. There's 62. If you look at that 15-minute chart, you traditional candle folks would say that every time it broke out to a high, it kind of got lower and lower and lower. Yeah, we're looking for the bid. It's a brand new month, right, Johnny? Brand new month. Let's look for the bid. And if we take out 58, look for 55 half. Yeah, that was a healthy liquidation. That was good. I wasn't expecting it to liquidate that quickly, so that's good. Now that's something that I'll take note of, right? That we do have more aggressive sellers at 70, 71. Yeah, this is good. Liquidation is good for the market. It's healthy, very, very healthy. Good stuff. Now all that inventory is above us, right? Yeah, I think it would be good if we even took out Friday's low and went and broke it. That'd be healthy. After every big sell, right? That's when large traders, once the bid is found, they will sit and start accumulating. You're welcome, RC. There you go. Ah, this is nice. It's healthy. And look, there's very little volume, right? So there's when you see no volume like that, like 50, 18, 20, very light volume on the way down, right? That can help you. Oh, it's like okay, the short sellers are seeing size, so there's no reason for them to, you know, to buy big. They'll just let it drop. See, there's a couple of hundred there, and then they just dropped it. And there's your previous day low. Exactly. Well, on the upside, Johnny, we need distribution, right? We need distribution. So if you were looking for a long, here's kind of a look below and fail of 58, but I'd wait for a couple of candles because I can clearly see that there's a seller at 59. So if you went to go buy that now, right? Wait till the next candle. If the next candle can open above 58 and a half, well then you know, right? If you're trying to buy a bounce, this method really helps you on the bounces, right? Let's see if we can take out that 59 quarter. And if we can't, it might need a trip down again. Yeah, you got 55 half? Yeah. Yeah. No, there's no long yet. Right? So this way, if you understand the look below and fail, you understand when not to take it. Right? That's why you don't end up buying that bounce and getting stopped out. Give it some time, right? And that's what we treat you at the trading syndicate. I think Steve's still going to have that sale running. Give us a shot for a month, see what you think. And if you do join the room, message me from inside the room. I'll be happy to help you figure things out. No long for me yet. What I would like, my perfect trade is the look below and fail of the Friday low, right? Because here we're kind of futzing around. I don't really know what's there. It might hold and move back up, but I'd prefer to take out the Friday low and come back up over it. No, Jiraj, no. So what have I taught you, Jiraj? Right? At the edges, right? Because there was a little short covering here, right? Where there was 250, 71. If you had taken it there, you would have gotten smoked, right? If you'd have taken it here, here you go, right? Let's see. So say you buy, right? You buy a couple at 58 and three quarters, right? Put your stop under that candle at say 57, 57 half, right? Now you got sellers at 60, right before 60, and then 60 and a half, right? Go put some sell orders out and see if you get taken, right? If this can't take the top of this candle here, well then you know, right? Look, there's sellers. They're front running the top of that candle. Let's see if we can print over 59. There you go. So say you're long 58 and three quarters, put a 59 and three quarters sell order out, and got taken at 59 and three quarters. My next one's at 60 quarter, right? I'll move it down to 60 because somebody's front running me, right? I'm long 58 and three quarters, trying to sell it at 60, and I'm out at 60. There you go. It's a scalp, but taking those small scalps teaches you how to take the trade, right? Don't worry about the short covering, right? Just focus on what I taught you. Look at the chart, right? Sometimes that's why like I'll say things, but if I haven't taught you how to look at this, don't look at it. Right? It's just something I'm noticing, right? And I'm talking out loud. Just focus on this. Okay? Don't get distracted. Right? You got to be laser focused on that 1 minute candle chart. Don't take your focus off of it at all. Right? Yeah, and knowing that the sellers initiate at the top of the candle, if we get past that, that's why you spread your sell orders out, because your sell orders tell you if the trade is going well or not. Because if I was long 58 and three quarters and I had that first sell order out and it did not get taken, if it did not get executed, I know that somebody is selling underneath the price I'm selling. So what's the point of me trying to sell something at $5 if everybody's selling it at 4.75? Common sense will always help you in this business, right? Don't focus on the shorts covering and what Paul Tudor Jones, what color tie he's wearing, all of that stuff. Just Focus on the candle chart, right? Focus on this, right? Map out where the sellers are, so if you're long, you know where you need to undercut them, right? Right? If I'm long 58 and a quarter and I know there's a seller at 59 and 3/4, right? I'll sell alongside, and if I get taken, then maybe I'll get out at 60 and a quarter. I put my 60 and a quarter offer out. It traded there, but I didn't get taken. Somebody's front running me. Move it down to 60 and get the hell out of it. Don't be a dick for a tick. Learn how to move quickly. That is important. You need to learn and think quickly and react quickly, right? So you're not sitting there with your thumb up your nose while everybody's trading around you, right? Learn that there is a sense of urgency, right? You need to convert your capital into inventory and back into capital quickly. That is the cycle of life, right? Right? Capital to inventory, back into capital, right? And just focus on that, focus on that, focus on that. Think about that when you're trading the candle chart. Okay? It's a good question that you asked that because you got to focus, right? New month, you had 3-4 days off, right? Now it's time to focus, you know? Let's see if we can take out that previous day low now, right? It's very easy to get distracted in this business because they give you all sorts of software and bells and whistles and all sorts of stuff. It's so easy to get distracted. You'll see guys that they're looking at 6 different screens, correlating markets, looking at the trajectory of the space shuttle versus the orbit of the moon. It's just like, just focus on the bid, man, and the offer, right? There's the taking out of the Friday low. There you go, Johnny. That stop down at 51 and 3/4 interests me. Right at the cost basis of the 26th. And if that level breaks out, then we'll come into those 44s that we talked about earlier and that I spoke about in the weekend update. We have news today? Cool. Good stuff. All right, folks, I'm going to leave you a little bit early. I have to go run into the GP, and I will be back at 9 a.m. Eastern Time. Please come visit us at thetradingsyndicate.org. I'm JJ. Thank you so much for joining us. Take it nice and slow. Map out the market. Stock your trades. Don't let them take your money. Okay? Right now is the time where we decide whether we can be decent traders, act like professionals, right? Trade good setups, okay? And we'll see you at 9 a.m. Thanks, everyone. Bye for now.